once got an email accusing me of being one of those lucky baby boomers that fluked the property market. And the question followed, what asset class can younger people invest in order to replicate the luck we had in the property market? Well, let me just point a couple of things out. We didn't fluke the property market. It cost us a fortune. I paid interest at one point, and as anybody of my era will tell you, at one point we were paying 17% on our mortgages. We paid through the teeth to access the property market. As it was, it worked. I'm amazed that we were on the wrong side of the eighth wonder of the world, compounding. We were paying the compounding returns to the banks that were the beneficiaries of the eighth wonder of the world. We were the people that paid them, and somehow we still managed to make money. So we took a lot of risk and it paid off. Your asset class as a younger person is possibly not property. And I think about my kids buying a $1 million property in a suburb they don't want to live in. And if the market fell over one day, they'd end up working for the Commonwealth Bank, working to pay the eighth wonder of the world to an already rich institution. You know, should you be doing that? Well, possibly not. But let me tell you that the asset class that younger people have got, that is a massive advantage over what the baby boomers have, and that is superannuation. It is just so obvious. In order to access superannuation, you don't have to pay interest, you don't have to take out a mortgage, you don't have to deal with the banks. And if it falls over, you're not going to owe anyone anything. It is so much better than the property market to put money into super. And if you put money into super, it's just savings. And one of the best bits of the property market for us growing up was that we had this forced saving element. We had to pay capital back every month to the banks. We paid interest and capital, and they forced us to pay our capital back. So we had a forced saving every month. And it's the same with super, because if you put money into super, you can't get it out again until you can access it many years later. So it is a forced saving. And what I would be doing if I was a parent trying to look after my kids is, rather than give them money to go and spend on something I wouldn't trust them to spend it on, that there would just be some consumer item that burnt the money. If I pay into their super fund, I'm looking after them in the long term. I am on the right side, putting them on the right side of the eighth wonder of the world, and they can't access it till many years later. So I would suggest that for younger people, you really take it seriously, realize the compounding nature of it, realize the discipline and forced saving nature of super, and put as much money as you can into super as early as possible. If you put $35,000 in, which is the amount you're allowed to put in at the moment, it'll change. But if you put $35,000 in, and say you put it in the equity on the aggressive setting in your industry fund, and it grew at 9% per annum, which is the sort of average return from the stock market. If you put 35,000 in this year, that's going to be worth 200 grand in 20 years time. And so you can see, if for the next 10 years you put in $35,000 every year for 10 years, you're probably done on super. You've sorted your retirement out in 10 years. So probably your best bet is to get as much money into super as early as possible. And if you can't afford that because you're not earning enough, make some effort to put some money in over and above what your employer has to put in for you. And then every wedding, Christmas, Easter, gathering with your grandparents, just bend their arm a little bit and see if you can get them to put some money in for you, because they're much more likely to do that than they are to hand you cash to blow on something that that will be worth nothing the moment you buy it. So get as much money into super as early as possible. It is your property sector, and whereas I was a lucky baby boomer, you can be a lucky super boomer.